good afternoon.
Buenas
So,
tardes.
welcome back to another episode of Let's Talk Rio. I'm your host, Ysmaine and here with me is Carlos. How are you, Carlos?
Hey, Nini, good, and you?
Good, good. So, we're back here for part two of cracking the code, understanding loan products with My City Lending. So, today we promise and we're going to deliver. We said we're going to be covering some of the non-conforming loan options that are for the people that don't necessarily just fix the, very general box. So some creative financing, some ideas, some things that might be an option for you and you didn't even know it was. So that's what we want to get into today. So to get started, we're going to get into one that's one of the most popular ones, especially for people looking to invest in real estate. Is it fair to say? I guess.
Very fair to say, yes.
So that's going to be DSCR loans, debt service coverage ratio loans. So I'll let you take over because you're the specialist.
Yeah, so DSCR is one of my favorite loans because it's good for people that, how do I say this politely?
Uh-oh.
No, just kidding, just kidding. It's good for people that don't necessarily claim a lot on their taxes, so to speak.
Okay.
They
Yeah.
have a lot of deductions, because of the type of business they're in. Let's put it
Yes.
that way.
That happened. Hey.
Absolutely, absolutely. So the cool thing about DSCR is that your income doesn't really matter. It's all about the property's ability to repay itself. So it's a debt service loan. Essentially, you need to put with a 700 credit or better around 20%, down as a down payment. And then as long as the rental income covers the mortgage, then the house pretty much qualifies. Like the loan pretty much passes essentially. It doesn't matter if you have, a ton of debt in your name or anything like that. So that's what's really cool about DSCR. It's also good for investors, first time investors and investors have been, veteran investors, let's say.
Yeah.
That have been doing it for a while. Because you can have as many DSCR loans as you want, essentially, as long as they're paying themselves. They don't go on your personal credit if you do it under an LLC. So it goes under the business credit, and as long as you make the payments on time, it'll never go into your personal credit. It'll always be under the business. If you have late payments, and those late payments will show up on your personal credit.
Okay. So just to kind of like summarize in layman's terms for everybody seeing. So if you are deducting too much on your tax and you don't have enough income, but you do have money and you have good score, DSCR loan can be a great option for you as soon as your mortgage is less than the median rental value for that property in particular for the area, right? So basically,
right, and it's not necessarily just self-employed borrowers. It can also be, let's say, somebody who owns a home and inherited some money, right? And they work, and they make, let's say, $35,000 or $40,000 a year, and they have a car and a home, so they're not like living out of their means, but they really can't qualify for more stuff, under their income. A DSCR is a great option for that type of client also, because it doesn't matter what their income is, as long as the property's rent covers the mortgage. You're good to go. So the cool thing about DSCR is that you can be like a 1-1, which means that if your mortgage payment is $1,000 and your rent is $1,000, you're a 1-1 ratio. And then if, say, your mortgage payment is $1,000 but your rent is $1,300 or $1,500, well, then the bank is going to give you a break when it comes to the terms that they're lending you on, as far as the interest rate or the cost of the rate and all that kind of stuff.
Nice.
And on the reverse side, if there's a property that right now the tenants are in there and it's not really paying market rent, but you will be
Mm-hmm.
market rent, like once you get it eventually,
Mm-hmm.
go down, I believe, to a 0.75. That means that if your mortgage is $1,000 and your rent is 750, the bank
Mm-hmm.
will still lend you on that property. It'll just be a little bit more of a down payment,
Yeah.
um,
Yeah.
but you can still buy a property, when you're not necessarily covering the full mortgage, um, because the bank understands that it's below market and that you're going to be able to get above it. So they
Exactly.
are a little bit more down payment, but you can do it.
That's awesome. I didn't even know. I just learned something new, so that's good to know. Yeah. And I think that's a great loan type for any beginner and ongoing investors because, like you said, it's not going to check on your personal finances. So let's say you already have your primary residence and maybe you
Right.
already bought one rental on a conventional loan on your personal name. So now you're like maxed out. You cannot qualify because your debt to income ratio is too high. Now you can take
Correct.
this in DSCR loans to, continue to acquire and add properties to your portfolio without, having to worry about that DTI issue.
Correct.
Yeah, so it's a great, great loan to, especially investing. I would say that's the most popular side of things, but also, like you said, for people that just cannot qualify for income, purposes. So
Hmm.
as soon as you have some more funds, because you will require a larger down payment, but it is a great option. And the interest rates tends to be a little bit on the higher end comparison to
It is a little bit higher than conventional financing, obviously, because there is more of a risk involved for the bank, and the way the bank processes the risk is by either increasing your rate or increasing your down payment to feel
yeah.
a little bit more comfortable. And it's a great loan, for example, for somebody who, for example, lives in Pennsylvania,
Mhm.
has works in PA, and wants to buy a house in Florida because the Florida market is really good and they want to do short-term rentals. Well, you
Yeah.
can do a DSCR with either long-term rental or short-term rental.
Exactly. So yeah, it's a great loan all around. Any other
Yep.
particulars as far as like being able to qualify for it? You said he's not the personal, but any other criteria for qualifying?
Not really. You just have to have a minimum of 20% down, depending on where your DSCR ratio is.
Hmm.
20% usually gets it done plus your closing costs.
Yeah.
You want to have at least a 700. Those are going to open up the most doors for you as far as, most favorable terms.
Yeah.
Um, you can go down to like a 660,
Okay.
but it does require a higher down payment to do so.
Gotcha. So if you have money, no problem.
If you have money and the house fits itself, you're
I
approved.
mean, done deal, right? Yeah, that's awesome. Okay,
Yeah.
okay. That takes me to another non-conforming loan that is popular too for people that are in a similar situation. Maybe they make money, but they are not necessarily on paper on the tax returns making as much money, and that is the bank statement loan. So explain to us how that works. Who should be using this? Who can qualify for that?
So that's another really cool loan that we have. Um, it works for self-employed borrowers. You can buy investment second homes or primary residence under them.
Mm-hmm.
And so essentially how a bank statement loan works is we take a look at your last 12 months of bank statements, and we add up all your deposits, minus out all your transfers because those don't really count.
Yeah.
And then usually we take a 50% expense factor, but we can actually lower the expense factor if we have a letter from your accountant.
Oh, okay.
And so, for example, somebody then let's say they move around, just for math purposes, so it's easier. Somebody owns a business and they move around about, let's say, $100,000 a month, right?
Mhm.
They'll get income of $50,000 they can use, to qualify. So it's a loan that'll get you to qualify for more than you would normally on paper.
Yes.
I had a client who owns a business. The business does like, I don't know, we'll go with millions of dollars. I'm not gonna give specific numbers.
Let's go over
And
$1
like
million.
the business does millions of dollars, a year in sales, let's say.
Mhm.
Um, and they report thousands of dollars in profit.
They have a lot of
And when I,
expenses, okay, Carlos? Stop judging people. They have a lot of expenses.
absolutely. And
Yeah.
conventional financing was just not the way to go for them. So
Yeah.
we did a bank statement loan, and they were able to qualify for a home that was like over 700,000.
Yeah, and that's the beauty of the non-conforming loan options, because really,
Yes.
especially for I think self-employed and business owners,
Hmm.
it's tough, because you are going to want to deduct and every all your
Yeah,
expenses. You do
absolutely.
have a lot of expenses, like as a self-employed person.
Yeah, genuinely, a lot of self-employed borrowers do have a lot of expenses. When you look at like your Uber drivers, all their maintenance they're doing on cars, and
Yep.
these people, I've done deals for Uber drivers that are making 150, $200,000 a year. Same thing for truck drivers, that are making $300,000 a year. But
When you
they're
look
they're
on,
spending, huh?
yeah, I was gonna say when you look on paper, right?
Right, right. When you look at how much they're paying for either their drivers, if they have like a business, like a trucking business.
Yeah.
When you look at how much they're spending on maintenance, on tires, on
You,
repairs, like it really does add up. You
yeah,
know.
very much so. So yeah, so bank statement loans is not similar, but like used similarly as a DSCI loan for people that reports less than ideal for a
Right.
regular conventional.
And when they're self-employed and they go, the DSCR route, so to speak,
Yeah.
um, DSCR is going to have a higher down payment because it's going to have not a down payment, higher interest rate
Oh, gotcha.
because it's going to have the most risk for the bank because there's very little documentation that the bank is actually looking at.
Yeah.
Whereas if you look at a bank statement, at least the bank is seeing, that there is, X
There's
amount
money
of
coming in.
money flowing through the accounts,
Yeah.
so you're going to get somewhat more favorable terms on that.
What were the requirements for down payments? I forget you mentioned.
Oh, okay. So for DSCR, you have, you need a 20%, but for down payment on a primary residence with good credit, you can get away with like 10% down.
You mean the bank statement?
On a bank statement loan for a
Yeah.
primary residence, you can get away with like 10% down.
That's awesome. That's awesome.
Hmm.
So DSCR definitely minimum of 20, maybe even 25, depending on the situation. But bank statements you can get as low as 10%.
Yep.
Yeah. And then would you say it would be recommended for someone looking for like a second home that maybe the DTI ratios are just not there, but if the income is, would that be a recommendation? Maybe a bank statement loan for the second home, or what would you recommend for someone planning on getting a second home?
Yeah. So bank statement is a great option for a second home. For example, I'll give you a perfect, for instance, I have a client from New York, doesn't even own a home in New York, but rents in New York
Uh-huh.
because, New York properties are so expensive.
So expensive. That's why they come to Pennsylvania.
That's right. So they bought a second home in Florida, which is like their vacation home.
Yeah.
And they did it with a bank statement loan. I don't remember what the down payment was. I think they put 20% because they just wanted more favorable terms. Like I
Yeah.
said, the more down payment that you put down, the more favorable that the,
The
terms
interest
the bank is
rate.
going to give you.
Yeah.
Yeah. So, yeah, they bought it as a second home through a bank statement loan. So, yeah, absolutely. You can
Gotcha.
absolutely buy second homes with a bank statement loan.
Awesome. So yeah, so that's a good way to benefit from that option too. So one more that is in the same lines of like the income issue here, or the debt to income ratio issue, is the P&L loan. So give us some more detail about this one as well.
So, the P&L loans or profit and loss loans, that's a really cool product also because we don't look at tax returns
Mm-hmm.
we don't look at tax returns on DSCR, bank statement loans, or the P&L loans. We pretty much just get a letter from the accountant saying, this is kind of like, how much you make and what your expenses are, and we can use that, to provide financing essentially. So it is a really cool program. Of course, there's a lot of risk, because we're just going off of what of a letter from your accountant.
Yeah.
So you're going to see that on your terms, as far as interest rate goes and down payment requirements go and all that kind of stuff.
What is the minimum usually you see for a P&L loan for down payment?
P&L, I have to double check, but I would say you're going to be anywhere between 20 and 30% down.
Okay.
On the
So
on
that
your
would be a
your
higher.
best side, yeah, on your best side, you're gonna be like a 20% down,
Got it.
with excellent credit, and like, and it's gonna limit your debt to income, so you're also not gonna be able to like just get whatever, you know what I mean? Like it's gonna based on what your income is on that, it's gonna give you a debt to income that you can not go past.
Yeah. I mean, technically, he's looking at the profit and loss, right? So how much profit you had based on that, how much you can qualify for. So that one
Correct.
technically does sort of look at a DTI to an extent, but it's just
To
a
an
different
extent, yeah.
lens, right? Yeah.
Yeah,
So
bank statements
higher.
will allow you to go to a 50% DTI with a 700 credit score.
Okay.
But normally, like when you're going into like the bank statement realm, um, it's typically not an issue because it's for very specific borrowers, that
Mm-hmm.
have a high amount circulating through the bank on a monthly basis. Doesn't
Yes.
necessarily have to stay there every month,
Yeah.
but a lot does circulate. So usually, like on a bank statement loan, like you very rarely will get into the 40s. You know what I mean? Because there's so much
Okay.
money that's moving through the account and you can use for income.
Gotcha. No, that's great. That's great to know. So that gives, I guess, some clarity because I think those are the three. Well, we have one more,
Yeah.
but these are the three most populars, I would think, for this kind of situation for buyers and investors in general. But there's one more, which is the asset-based loans. So, what is the difference, and who should go towards this route versus like the P&L or bank statement or DSCR?
So I had a client who started, they were doing another company, and then they finished that company and they started a truck driving company, and they had only been in it for like 6 months, but they
Mm-hmm.
had like a reasonable amount of money saved up. I think he had like maybe 300 or $400,000 saved up.
Yeah.
And you take you take the, say, the 400,000 minus the down payment,
Mm-hmm.
and then you take that amount and you divide it, and then minus, I think, like 1 year of reserves, and then you take that amount and you divide it by 60, and that number that it gives you is the number that you can put for income in the system to qualify, and that also allows you to go to a 50% um, debt to income.
Gotcha. So basically similar to someone that didn't report much for the tax returns yet, like going towards the bank
Or don't
statement
even have tax returns
or
yet,
don't even have it. Exactly.
because their business is so new, and when you have a new business, especially when it's a business, you have to have 2 years of income in order to be able to use that income 2 years of tax return, sorry, in order to
Yeah.
be able to use that income to qualify.
Yeah. So this ones would be what they already have in hand. That's their net worth, like it says there, or your income,
Exactly,
combined
yeah, yep.
your assets that you have on the property.
It's also good for people that have, a decent amount of assets, and don't want to necessarily blow their cash, let's
Yeah.
say.
Exactly. Yeah.
So they could borrow against, like, based on their money, they can borrow based on that.
I see. So they would use their assets as a, what do you call it? A when the bank uses like your asset as a way to fall back in
It's
case you don't
not,
make payments.
but it's not a collateral because the
It's
bank
not a
doesn't hold
collateral.
on to it. The
Okay.
bank, the bank does not hold on to it. They just use that to calculate how much they're comfortable with giving you,
Okay. So that's good to know. So
essentially.
it's not they can use it, but they don't hold it and work
Yeah, it's
somewhat
not like
as
it's
a
not like the
collateral.
bank's gonna say, okay, I'm gonna keep your 200,000 until you pay me my 300,000. It
Gotcha.
doesn't work like that.
Yeah. But if you don't pay what you're buying from them using an
Oh,
asset,
you're
then
gonna
you're
pay.
paying dues. Yeah. So somewhat of a collateral, right? Yeah. So I think that's it for like the non-conforming investing loan types. We're gonna get
Primary
into,
residence, yep.
yeah, exactly. So we're gonna get into some common ones, but different situations. So you guys know as well that there's different loan types available there. So the first one, which I think is one that there's a lot of questions, especially from my buyer clientele coming to me, and I bet you probably get a lot of that too, is the new construction loans. So overall, just before you get into the nitty gritty, new constructions can be done in different ways. When someone is talking to a builder and the builder has a property that they're building, like a mass production builder, I'm not gonna name names, but like those community builders that are constantly building, and they are like options ABC basically. Those don't necessarily require a new construction loan because they're going to be ready in 2 to 3 months and or even 6 months, and they still can do what you call it an end loan option to
End loan,
purchase.
yep. Correct.
Which would be a regular loan that you can use the ones from the first part of this series where you can use conventional FHA, VA, you name it. New construction loans are for properties and builders that are going to be either semi-custom or custom builders, and they are building that property for you, and that's it. So we have to actually have, there's options to do one-time settlement, and there's options to do where you can purchase a lot and then do the building later. So right now we're going to talk about the one-time settlement where you're buying lot and building itself all at one time. And then Carlos, can you tell us what are requirements to qualify, like usually what the down payment is for that, and how does the loan actually work once you settle and then during the construction periods? I think that's the question marks that usually we get from consumers.
Right. So requirements are pretty similar to your normal loans when you do the one-time settlement. The biggest thing is that you have to qualify for your payment, and then so if you do a one-time settlement, you're gonna buy the land. The bank is gonna finance the land and finance the build. So you have to qualify for the initial payment for just the land, and then you're going to make interest-only payments on the build until the property is done. So you have to qualify to be able to keep paying your rent or your mortgage, and be able to also, pay the interest-only payments on the build as the funds are drawn. As the different phases of the property moves through the different phases of the construction.
Yeah. And I think that's the biggest thing that people don't realize is that when they're building, they do have to qualify to make those payments, but some people don't even know they have to make payments during the build. So that is the important thing to understand, that the taxes for that property, they're not set yet. They are an estimated tax for the annual. And they usually going to make those taxes higher than the actual, which means you're going to be paying your interest payment only, which includes taxes, on a monthly basis based on the draws that they take. And those can be pretty high. And then if you overpay on taxes, because that's probably what's going to be, once the property is ready and you actually convert your construction loan into your end loan, at that point, you're probably going to get a reimbursement of taxes that were overpaid because of the overestimation that they had on property taxes. But those monthly payments of interest and tax payments that you have to make during the build, they are going to be in adjunction to whatever you're paying right now, being a rental, being a current mortgage. So that's something people that are considering new construction, especially semi-custom and custom builds, have to take into account, is that they are going to pay extra payments on top of what they're currently paying. And the bank is going to look at that as well.
Yeah, correct. And the bank is gonna qualify you, not as you go, but the bank is gonna qualify you at the highest payment you're gonna end up making to know if your DTI is gonna pass or not with that highest payment before you get the house.
Correct.
With both payments, with the new construction at full pop, so to speak. And your rental or mortgage, whatever your current housing payment is as well.
Exactly. And then the most common, I would say, for new construction loan terms you're going to have is going to be a conventional loan at the end of the construction period, or a VA loan. And there are benefits for VA buyers as well. You are able to purchase a new construction with VA. there's no necessarily such a thing as new construction loan for VA, but there is a way that they structured so you can still buy new construction with VA. Is that correct?
Yes, that is correct.
Yeah. So you can still benefit from your 0%, 100% financing loan for VA, but they might require a deposit that's going to be covering your closing costs when he actually, closes or when it's finished build and all that. Can you get into details on that just to clarify a little bit when it comes to VA construction?
So give me 1 second. Let me pull up my guides on that.
Yeah, those are very specific questions. And then just while you're pulling that up, I know on the conventional side, it's pretty simple. I would say majority of times it's the 5% down payment requirement. So, or more, of course, if you as the buyer wants to do more, but I think the minimum usually is 5%.
Yeah, they usually starts at 5, yep.
Yeah, and the interest rates are fairly comparable, if not even sometimes better than the going rates of the market. So it's not necessarily you're paying higher interest rate on a new construction loan versus buying an existing home.
Yeah, that is true. There we go. How many years? Did you play all 4 years? Sorry, my system is a little slow today for some reason.
It's all good. And I put you on the spot. We didn't talk about this before.
You did. Wait a minute. We didn't talk about this. I would have had this up on my screen.
Yeah, this is more specific because VA is just like a whole different, I would say, ball game when it comes to new construction, because they are just kind of adjusting and making it fit the benefits of a veteran with a regular VA loan to kind of attend the requirements of a construction loan.
Yes, you are right. And let me see.
And I think it's fair to say too, and this is just based on my experience why you're pulling that out there. Different builders will also have different specials. And by that, I mean, some builders nowadays might even be considering doing a semi-custom built home to you with an end loan option. So just keep that in mind, because you might not even need to make those interest payments.
You might not need to do like a new construction. The builder will essentially finance the build and just have you get an FHA, VA, USDA, or conventional loan at the end.
Perfect. And I'm seeing more and more of that since the COVID happened and the need for, more inventory. They're building more, so they know they're guaranteed to basically sell a property. So they're offering those options more and more. So you as a buyer, just make sure you are going to different builders and talking to different communities so you can see like, hey, can you do this option for me? Because in the end, it is more favorable to you as the consumer to use an end loan instead of having to do the interest payments during the build of the property. So if you can benefit from having an end loan mortgage from the beginning and with a one-time settlement, that's the game changer.
Yes, I agree with you there.
And for new construction loans too, you do have an option to either purchase a lot of like a builder within a community, but you also have the option to pick your own land elsewhere from like a different seller and work with a builder. You just have to make sure you have contracts with the builder and the contract to purchase the land together, and then the lender still can do a one-time settlement for you. So Carlos can even give more detail on that, but you do have the option to do your own land together with build as a new construction loan portion.
Yeah, and you can also do you can also buy the land, and if you're not quite ready to build yet, or you're filling out builders, but it's a really good deal on the land, you can do just a lot loan, and then build afterwards, of course.
Yes.
Typically, lot loans do have a certain requirement when it comes to your minimum down payment for them.
Yeah.
And there is typically a minimum loan amount for a lot loan itself.
Yeah, I would say it's either 35% down payment or a minimum loan amount. I have seen anywhere from 60 to sometimes they require a minimum of 80 for the loan. The lot.
I've seen 100 too.
Yeah, I've seen 100 too. So it varies from lender to lender how much you're putting down, your credit score, your buying profile, basically. But The lot loans are
Essentially,
very
yep.
wide range, but you do have the
Yep.
option to buy just a lot if you're not ready to build yet. It's just that when you buy the lot and you're building it later, just keep in mind you're gonna have two times, closing costs because you're gonna have two settlements. That's why
Yep.
sometimes we recommend finding a piece of land, getting the builder, and doing a one-time close with a new construction loan, so you can minimize the closing costs for you on your build.
Yes, and the cool thing about it is also like if you have the land, you can use the land as equity or towards your down payment to cover your minimum down payment on the loan itself. Also,
Yeah, yeah,
that
exactly.
happens more with investors. I have investors that um will have the land and then will have it for 6 months or whatever, while they're getting their permits and all that stuff situated,
Mhm.
and then they'll end up coming to me and say, hey, I bought this land, it cost me 50,000, so let's say the build is 200,000, just for
Yeah.
math purposes. Well, then now you have 50,000 in equity, so then you really don't have to bring much to the closing, if any.
Yes. Yeah.
So that is something else. I'm gonna have to come back to you on that VA because I can't find it right now in my guidelines.
That's all good. That's all good. So basically, just know you as a veteran, you still can benefit of your VA benefit if you want to pursue new construction, endeavor. And then there are different programs from different builders, but also different lender programs. So just call Carlos. He'll get the answer for you.
Yeah, absolutely,
And then
absolutely.
maybe if we can knock out two more in the next like 8 minutes, so we don't keep this episode too long, but I feel like it's
Okay,
worth checking on these two. So
let's do it.
both Carlos and I are foreigners, so we wanted to bring up options for our foreigner, members out there. I'm from Brazil. Carlos is from Puerto Rico. No, Dominican
Dominican
Republic.
Republic.
Yes. We're foreigners and we love helping, foreigners alike. So we do wanted to mention about the ITIN loans, which is for non-US citizens that don't have social securities, or maybe you are undergoing the process, but you don't have a social security card yet. So that is an option that Carlos actually offers. And if you want to just kind of give some general details on that too.
Yeah, so ITIN loans are, like you said, for people that don't have a social. Um, they're really good, for example, for a lot of people, a lot of let's go with foreigners that came to this country, right? That are in
Yeah.
the process of getting their papers in order.
Yeah.
They usually, will have some kind of business, so they're business owners, and they're reporting, their taxes, you know, um, correctly and all that stuff.
Yeah.
So they can get an ITIN loan, based on that. The requirements for ITIN are, a little bit more of a down payment, definitely. Typically, you're looking at like 20%. I have some investors that I think would go to 15% down.
Yeah, I think I've
Um,
seen the lowest I've seen was 15. Yeah.
yeah, I used to have one that went 10, but then they don't do that anymore.
Oh, it's a
um,
big liability, right? Especially with everything going on right now.
Exactly, exactly. But it is a great program for those kinds of people. There are, credit requirements where they have to have a certain amount of trade lines for a certain amount of time, in
Mhm.
order to qualify. That's one of the biggest, I would say, disqualifiers for ITIN, is
Mhm.
that you need to have at least 3 trade lines for 12 months, or 2 trade lines for 24 months, or 1 trade line for 36 months. And
Gotcha.
you can't
And just
use
to
like,
clarify to the consumer, trade line, is it like a credit card or loan or something
yeah,
like
like a
that, right?
credit card, a personal loan, an auto loan, any of that stuff.
Yeah.
Um, and they don't allow for authorized users, like, FHA, will, in certain cases to help you, like boost your
Boost your
score is one
credit.
of the strategies, that we use, on the more conventional loans,
Yeah.
um, to boost your credit. Um, ITIN loans won't count that trade line in your favor.
So
It'll be
you
like
have
it
to
doesn't
be on
exist.
your name and you have to be
Yes,
the one making those payments.
yes.
Yeah.
You can be a joint, but you can't be an authorized user.
Gotcha. Yeah.
Yeah,
So that's a
I
good
would say that's
option.
one of the biggest things, for ITIN.
Yeah. And then the other one that we have too is the foreign national loans. So how does that differ, and who should be considering this option?
Right. So foreign nationals, they don't need to have an ITIN. They can be straight foreign national. You know what I mean? For
Yeah.
example, like I'll give you a perfect for instance, right?
Hmm.
Usually in Dominican Republic, you have to put anywhere between 40 and 50% down when you're going to buy a home,
Yeah.
right? And interest rates, you're going to be looking at, you know, 20, let's say, in Dominican Republic,
Very
right?
bad.
Like
Yeah.
pretty high, right?
Yeah.
Um, Whereas here, a foreign national could come in, with anywhere between, 30% interest, sorry, 30% down payment.
Oh my gosh, I was like, that's way more.
Yeah.
But yeah.
30% down payment, and then they can potentially get, one, 2 to 3 points above market, above like where your normal, financing is
Yeah.
for, DSCR or anything like that, you
Yeah.
know. And it's also like another way for them to like kind of like not let the inflation in their country hit them as hard. Like in Colombia, let's say somebody who bought a property, I don't know, let's say like 7 or 10 years ago, right?
No.
And the Colombian peso could have been like 1,000 pesos to the US dollar. Now you could be looking at, I don't know where the market is. You know what? Just for fun,
Yeah.
since we're live, let's just check it out.
Let's check.
Let's say $1 to Colombian peso. So now let's say the Colombian peso, $1 is now 4,000 pesos. Like you have a property here, it's appreciated. It's been paying itself off because it's an investment.
Yeah.
And then on top of that, you don't have to worry about the fact that your currency diluted so much because it's in another currency.
Exactly. Yeah.
So
Plus, someone
that's one of the
investing
main
here,
things.
investing in such a stronger economy too, that's been consistently growing,
Yep.
in comparison to investing in other countries where it may not be the same, right?
Correct.
Anything depreciating as soon as you purchase. So that's
Exactly. Yeah.
a big difference. I think I had
Good point on that one too.
one Brazilian investor purchasing a property here, and they were able to get at 11.75 interest, which I thought was actually pretty good.
Yeah.
Considering
I didn't want to give any specific interest rates so I don't get hit for trigger.
no, yeah, but I mean, like, just a disclosure that can vary dramatically from person to person and from bank to bank, right? So
Yes.
it depends a lot on a lot of factors. But this one person in particular, that's what he got, and I feel like that's kind of like maybe the ballpark. You're probably looking at from anywhere from 11 to 15, depending.
Actually, they're a lot lower because
really?
typically foreign nationals, they keep the property for anywhere between like 5 or 10 years.
Yeah.
So they can do, I'm not gonna get into specifics. They can do certain mortgage vehicles that will mimic kind of like where the market is right now because it's only for X amount of time.
Yeah. So like if it was a shorter term, they get better rates.
Right.
That makes sense.
Mm-hmm.
So that is it for foreign national loans, and I think we cover quite a few today. If I'm not mistaken, we went over like 8 different loan types. So hopefully you guys, enjoyed and learned a lot. And if you have any specific questions, please don't hesitate to reach out to Carlos because he's a specialist. And then if you want to, continue pursuing and finding the home, that's where I come in. But yeah, we're your, dream team here. So if you need anything at all, please don't hesitate to reach out to us. We'll be happy to help you guys. But anything else, Carlos? You good? I
think that's good. Yeah. I mean, reach out to Nini if you want. She'll just send you to me anyways.
So yeah, that's good, guys. Thank you so much for watching and stay tuned for our next episode. Yeah.